Let's talk about a specific set of older Americans, those aged 50 to 64. At 65, most seniors can get medical coverage through Medicare, but until then, the options are an employer-provided health plan, a privately purchased plan, and for those with very low income, the Medicaid program may be available. This group may prove to be the most difficult for Republicans to satisfy as they move to repeal and replace the Affordable Care Act.
As Washington politicians speak for overcharging older Americans for their health insurance,
The American Association of Retired People has come out against the Republican plan because it says the bill would increase costs to Americans aged 50 and older by thousands of dollars per year. A report from Standard & Poor's projects that under the GOP's plan, there'll be a decline in the older insured. Why is this older population proving such a huge challenge to cover? Many in this age group already get their coverage from the individual marketplace. By one estimate, about 7 million people. But some in this age bracket want to exit their current careers to work for themselves or retire. Others are afraid of being fired and losing the jobs that provide them with their medical coverage before they turn 65. Republicans say their plan will encourage competition and help people on the individual market. That under Obamacare,
premiums are going up, deductibles are going up, people are getting priced out of the market.
What are the key Republican reforms that could affect older Americans? The medical insurance industry has asked for and receives in this bill a major reform to how premiums are calculated. Under Obamacare, insurers were allowed to charge older Americans 3 times the premium that younger people pay. Insurers say that 3-to-1 is too tight because the medical needs of older people are so much more expensive. The replacement plan widens it to 5-to-1. That means premiums will decline for younger people but get higher for older people. The replacement plan tries to compensate for this with government financial support in the form of fixed tax credits, the green line on this chart, that get higher with age. These credits, however, aren't linked to the cost of actual insurance premiums in the marketplace. It's a fixed amount, no matter what the insurance companies decide to charge. Under Obamacare, on the other hand, instead of tax credits, income-based subsidies offer a large discount on healthcare premiums based on the actual cost to the consumer. According to the S&P analysis, a $3,500 or $4,000 tax credit will fall well short of the actual premium price for the 50 to 60-year-olds in the individual market. That's one estimate. Experts at present are also struggling with how to factor in the impact of repealing the current mandate that everyone has health insurance or face a penalty. If younger, healthier people decide to risk it and drop their coverage, that could force insurers to raise the cost of premiums by amounts unknown.